Hello, Travis Daggett with Telestai Bookkeeping and Tax. Going to talk today about one of the most important parts of bookkeeping, both for a business owner and for a bookkeeper. Let's jump into it. Starting off on the right foot or tripping right out of the blocks. We're talking about info gathering. Could be part of the onboarding process for the bookkeeper and their client. So for bookkeepers, here's why it's so important. First, it accurately determines complexity. This prevents surprises later. So complexity, or adding a layer of complexity to a bookkeeping project, would be things like payroll, sales tax, third-party apps, accounts receivable, accounts payable, etc. Each one of those is going to add complexity and time, right? So for the bookkeeper, this is going to be part of how you determine your pricing. It also helps you to precisely evaluate the scope. This is related to complexity, just separating it out a little bit. So things like commingling. The more commingling you have, personal transactions and business accounts, the more time you're going to need, and it's going to be more demanding on the business owner to provide information to separate those out. Multiple businesses. A couple different ways this can show itself. Number one, if you have multiple businesses, multiple EINs in one QBO subscription, you're going to need to use the location or business feature. And that's another layer of complexity. If there are other businesses in other QBO subscriptions or just outside of this, the QBO file, QuickBooks Online file you're working on, then you're talking about intercompany transfers that are going in and out. And again, that's something that requires additional work. Classes is another feature. People often use this for addresses of properties in real estate investing. There's all kinds of different ways you can use it, and it really provides great functionality on the profit and loss, the income statement. And it's also more work, okay? And another way to think about that is it's providing more detail, it's providing cleaner financial statements, but it requires more attention to detail. The third item here is a targeted timeline for completion. All the documents collected before starting the clock on the cleanup. This will really help you out as a bookkeeper. One of the things that is very troublesome for the bookkeeper and the business owner is if you have to keep trickling in requests on an ongoing basis for more documents. Now, there's really no way you can tell if you have all the information that you need, all the documents that you need before you start. But you do your best to determine that up front with info gathering, so that can be minimized. That way, once you start the clock, you can really be a lot closer to completing it according to your timeline. Well, really, you should be hitting it. And that's having all the docs is essential for doing that. If you're saying you're going to complete this project in a month and you don't have all the docs in, well, now the business owner may take whatever period of time to provide those. You could be waiting on them. Makes it very difficult. The fourth point is hitting the bullseye with pricing. If you don't know the scope and complexity of the project, it's very difficult to price it accurately. And that's a big problem for bookkeepers, especially when they're starting out. They're Typically, what I've seen is underpricing their services, and that makes it hard for the business owner as well on an ongoing basis, because then as the bookkeeper, you're forced with the decision that you're either going to keep this client for monthly bookkeeping and continue to lose money, which is not good, or you're going to have to come back to them and tell them that you're drastically increasing your prices because you really underpriced to begin with. That's not good for either one of you. The fifth is setting the expectation for communication and response time. So think about this. If you have an organized info gathering and onboarding process to take them through, and we're going to go through the types of questions that you should ask. And if you're a business owner, you should be asked by the bookkeeper. It really sets the expectation for this is how we communicate, and we're responding within a few days. That'll really help both parties. The sixth point is instills confidence in the business owner that you know what you're doing, you know the questions to ask. And the last is it avoids scope creep. So if you don't have all the information up front, then when the business owner provides information, that may provide complete additional workflows that you didn't even know about. For example, if you didn't ask up front about third-party merchants, and then they say, oh yeah, we use Stripe, we use Square, we use Venmo, we use PayPal, and now all of a sudden you have all these merchants that you're going to need to process. Maybe the app's connected, maybe it's not. You're going to need all the reports. You're going to need to make sure the app is mapped correctly if it's connected. And it can turn into a very different project than you initially thought it'd be. So these are all, well, not all, but these are just 7 reasons that this is so important for bookkeepers. Let's look at business owners and why it's so important for you when you're choosing a bookkeeper, or maybe working with a bookkeeper on an ongoing basis. First, it gives you insight into the bookkeeper's expertise at the front end. The last thing you want is to find out the bookkeeper does not have the expertise needed after you've already started the project, right? The second is it identifies components that increase complexity and prices. So you can tell that you may want to handle some in-house. Right? So maybe you say, well, we'll go ahead and categorize the transactions in this account, or in these accounts, or all the accounts. And then we're going to have our bookkeeper reconcile. We're going to have them prepare the equity section for taxes. Could be various things. Some bookkeepers will do this, some won't work with you on that kind of thing. And some bookkeepers will provide training on best practices. So bookkeeping and training or teaching or coaching, consulting are 2 different skills. Some bookkeepers enjoy and are good at doing both, some aren't. So that's something that can become apparent through the info gathering process. The third is it gives you a good expectation for completion time. If, just like on the bookkeeper side, if you've only given them some of the information needed, because you don't know everything, that's what they should know, then it makes it hard. But in this case, if you've done the bookkeeper has done a successful job in info gathering, it's pretty predictable that it's going to be completed on time. The fourth, very important for you as a business owner, you're busy on other things. That's why you're hiring a bookkeeper. So it prevents frequent communication, asking for more information, asking for additional documents, right? Then it can get to the point where you think, why am I hiring a bookkeeper when I'm continually having to provide more information. Why didn't you ask for this up front? Or I already gave you this. The last is it provides clarity on the tasks to complete cleanup or ongoing bookkeeping. So if this is done right, you can see how you're providing a template to use on an ongoing basis and the workflows to take advantage of if you're handling the bookkeeping on in-house, or if it's going to be ongoing. Sometimes you may want to have the bookkeeper do it for a period of time, and as your company grows, eventually you may hire a bookkeeper to be in-house, and they can be trained by what is already there in the books, and or the bookkeeper may offer to train them as well. Let me make sure my audio is working. Yep, I see it. Okay, just checking. Getting started. Here's where we're getting into the details and the kind of questions that the bookkeeper should ask, and as a business owner, they should be asking, and the kind of information you should be prepared to give. Was this a new business this calendar year? This is going to impact all kinds of parts of the bookkeeping process, and what month. So this is going to tell you, for example, if it started during the year, you're not asking for statements for the whole year, you're not importing transactions for the whole year, you're not reconciling for the whole year, but a portion of the year. Do you have more than one business and or 3 real estate properties under a single QBO subscription? Now, this is speaking to complexity and scope. And how many? Very different projects. One business, a couple properties in a single subscription, and multiple businesses and a dozen rentals, let's say, in a single subscription. You're going to need to be activating the business feature and the classes to do it right. Have you filed a tax return for any part of the cleanup period? That's important. Or the prior year, really. Let's say we're doing a 2024 cleanup at this time, or your business owner that needs that done. The 2023 tax return is going to be very important for booking the balance sheet items. That's, of course, if your tax return has a balance sheet, depending on your entity type in your business. But that should all be matched up to the balance sheet, your Schedule L on your tax return. The last one for this slide is your business up to date for sales tax and payroll tax returns for 2023. Very important. It can be quite cumbersome to figure out the sales tax or payroll tax liability if you're not current. Digging deeper here in info gathering. Question for the business owner: are you able to access and willing to upload requested documents? Things like your tax returns, your credit card statement, your bank statement. Sometimes it's not just a matter of willingness, because this takes a fair amount of time, or can take, but it's also the business owner's acumen with technology. So again, something to think about if you're a business owner. How good are you at getting CSV files from banks if needed? How good are you at scanning documents into PDFs if needed? Downloading PDFs, using cloud storage, sending items that way. Next, the number of financial accounts or bank accounts connected to the QuickBooks Online account. So this is just sheer volume of the project. Are there any accounts that are not able to be connected? And then if so, can you provide statements in a CSV file? Very important. So as soon as you have a bank that can't connect, now you're talking about increased workload to process the transactions. And then if you don't have a CSV file, now we're going to a whole nother level of labor needed to convert statements to CSVs, upload them, or to manually enter transactions. Co-mingling and payroll. Do your books for this business contain any personal accounts or transactions that you're unwilling to separate or recategorize as recommended by your bookkeeper? So this is, again, as a business owner, to have a successful handoff for a project of bookkeeping, you need to really be recognizing them as the expert and have that confidence in them as the expert. And on the bookkeeping side, it should be deserved confidence. And a good bookkeeper is going to help you separate that so you don't have that commingling. And if there are certain ways that, or personal accounts that you want to keep, that's not going to be in your best interest, probably. A good bookkeeper is going to tell you that, and they're going to require you to stop commingling. Not good for either one of you. Does the business track payroll for employees or contractors and 1099s? That's definitely one of the most complicated parts of bookkeeping. Now, the next question is, do you use QuickBooks Online to track payroll? That makes it a lot easier because all your reporting and your filing is internal to QuickBooks. So you're not having to go outside for your source documents and that you need to reconcile your liabilities on your balance sheet and to match your wages and taxes on your P&L. And in which quarters, of course, that's important to know. Sales tax and assets. The business collects sales tax, and then you can verify in QuickBooks if the sales tax center is turned on, and third-party apps. If you look on the report, it'll show sales tax collected. The state and the filing frequency could be monthly, quarterly, or annually. Did the business acquire any fixed assets in 2023? 2023, we're saying prior to the cleanup period, if you're doing a 2024 cleanup, for example. And this would be related to the tax return as well. If something is not on the tax return and should have been, do you want to add that to the books? Usually fixed assets are a single purchase for over $2,500 to capitalize something. And then did you dispose of assets? Again, if that wasn't reflected on the tax return, that would have to be adjusted. Loans and inventory. Does the business have active business loans? And again, you can look in QuickBooks and on the balance sheet. Does the business track inventory? And that'll be in QuickBooks in the products and services feature. Is it up to date and accurate? And what's the balance at the beginning and the end? So again, if you're a business owner, you should be prepared to provide this information. Accounts receivable, accounts payable, point of sale systems or merchants. Does the business track AR? So this would be using invoices, receiving payments, having your customer accounts set up, running your aging summary report and seeing how current the customers are. You can Some people may not be tracking it in QuickBooks Online, outside of it. So again, of course, you'll need to have those balances to match to. Same thing for accounts payable, billing and vendors, and then third-party apps and merchant services. So one thing that a lot of people miss is if you're receiving revenue, you're accepting payments by a merchant, a third-party app, of course, they're taking out a fee. And most of them take the fee out before it's deposited. Some charge a separate monthly fee, but most of them it's coming out of the gross and you're getting a net deposited. So those fees need to be separated out. Well, they should be, because that's going to be an expense and decrease your taxable income. It's going to decrease your net income on your bottom line, and is a very important part of avoiding taxes. Checks. But first, here's balance sheet accounts that were created in error and need to be made inactive. That's important to know. Manually writing checks. This makes a big difference. So particularly if there are a lot of these, do we have check images? And are they legible? If there are a lot of handwritten checks and you can't read them, no matter how much you zoom in and turn your head and try to figure it out, well, then the business owner is going to need to provide a spreadsheet with the payee and the category. And, or is it already in QuickBooks Online? Did the business owner enter those checks? Which would have the payee in the category. And then, of course, as you see that come through the bank, you'd match that in the bank feed. And volume. This is just sheer clicks and typing. What's going to be involved here? How many transactions a month? Big difference between a project with a few transactions a month in a bank account, or 100 or 1,000. If the business is something like a retail or a restaurant, of course, there can be a lot. And then how many manual checks per month? Reason being what we talked about in the prior slide. Cash and equity. So first question here, do you have transactions with non-specific vendors? Things like Walmart, Target, and Amazon. In other words, when we see these transactions come through the bank feed, what are you buying? At Walmart, is it food? Is it office supplies? From Target, same kind of thing. Amazon could be anything, right? It could be cost of goods sold. Who knows? Could be a fixed asset. You buy a computer or something like that. So if you do, that means we're going to need more specific details. We're going to have more questions on how to categorize those. It may be something as simple as, we always buy office supplies at Walmart. We always buy food for the office snack area at Target. And on Amazon, we always buy whatever we buy all the time from there, office supplies. Next item, cash deposits or ATM withdrawals. So these are items that we would need details on. Now, if they're always the same thing, of course, that makes it easier. Are cash deposits always sales income? Or sometimes they owner contributions? Are they reimbursements? ATM withdrawals, are those always for the same thing? Are those owner draws or partner distributions, or could they be used to for parking fees? So again, if it just comes through the bank feed and says ATM withdrawal, and if the deposit just says cash deposit, We don't know what it is. We don't have the information to categorize that. And then regarding equity, were there partner, shareholder, or member contributions or distributions during the tax year? And how do we know where they're going, especially if there are multiple partners based on percentage? We would need to know the amount, the date, and the payee for each contribution. So if you're a business owner, you're starting to get the picture here. If you haven't been keeping up with this can be a lot of work as part of the info gathering, but it's really necessary. And if you try to get out of it by saying, okay, well, okay, here's what I have. I have this, and this document. Can you get started? Because I'm in a rush to get this done by tax time. That's really not the best approach for you or your bookkeeper. You should have everything collected before you start the process. Neither one of you want to be redoing anything in the books unnecessarily. That's just increasing the costs. Tax returns. This is specific information on tax returns. So if you're a business owner, you'll recognize what entity that you are. If you're a single member LLC, you're going to need to provide the Schedule C, most common, E or F, all those pages, including the depreciation report. So that'll show your fixed assets and your depreciation. So that can be reflected in your balance sheet. Now, a single member LLC could be an S Corp and file an 1120S form. In this case, we need the entire return, including depreciation detail report and amortization detail report. If you're a multi-member LLC, if you're a partnership, you'd file a form 1065. We need those same forms or parts of the return, depreciation, amortization. If you're filing as an S Corp, same as we mentioned prior, the 1120S, depreciation and amortization is what we're mainly going to be looking at. And a corporation, a C Corp, less common in the small business, small to medium space, but this would be an 1120, and we need the entire return, that again, including the depreciation and amortization. And then last, a nonprofit, again, not super common, but this would be a Form 990, or what they call the postcard form. And that's for nonprofits that are smaller, $50,000 or less in gross receipts. And then there are some organizations like churches that aren't required to file a Form 990. So that should give you a good idea as a business owner what an experienced, a good bookkeeper is going to ask for in info gathering as part of the onboarding process. If you're a bookkeeper, this should give you a good outline of the types of questions you should be asking and what you should be asking for, so that you make sure on both sides that you're hitting the target on the deliverable, that you're making a promise to the business owner on the bookkeeper side to give them in a timely manner, and can really set up, if you're starting with a cleanup and then you're going to ongoing or monthly, it can set up a good relationship between both sides where the expectations on communication and what you're providing are the process and procedure and the workflow, the systems are in place to make it successful. Any questions on this? Comments, please post it, and I'll be happy to answer there and or make more videos to clarify or provide additional information.